All right, so today we're going to be checking the vital signs of an absolute giant, Carnival Corporation. We've got our hands on their latest financial report, and you know what? We're going to treat it just like a patient's chart. We're giving this company a full health checkup to see what's really going on under the hood. So this document right here, this is basically our all-access pass to the patient's chart. Now, yeah, it's full of numbers and corporate jargon, but buried inside is a really fascinating story about the health of a massive global company. Our job is to read between the lines and decode what it all actually means. To do that, we've organized our checkup into 5 key areas. We're going to start with the lifeblood. That's revenue and profit. Then we'll look at its metabolism, the expenses. We'll examine the skeleton in the closet, its debt. We'll test its immune system against legal threats. And then finally, we'll offer a prognosis by looking at all the risks up ahead. Okay, first up, the lifeblood of any company is its income. To really understand Carnival's health, we have to follow the money, see how much is coming in and where it's coming from. So if you look at the breakdown for just 3 months ending in August 2025, it's super clear where the money's coming from. Passenger tickets make up the lion's share, about 2/3 of the total revenue. That other third, that comes from everything you spend once you're on the ship. Drinks, excursions, you name it. And the scale we're talking about here is just immense. That adds up to over $8.15 billion in total revenue in a single quarter. That is a staggering amount of cash flowing into the company, which tells you just how strong consumer demand is right now. And get this, it's not just empty revenue. After all the costs were paid, Carnival walked away with a net income, that's pure profit, of $1.85 billion for the quarter. So from a lifeblood perspective, this patient looks very, very healthy. So a high income is great, but a healthy company also needs an efficient metabolism, right? So now we need to look at the other side of the ledger, its expenses. Where is all that money actually going? This table here gives us a peek at the biggest costs of running a cruise empire over 9 months. The largest category, other operating, is a bit of a catch-all, but it's followed really closely by commissions to travel agents and transportation costs. Then you've got all the expenses for onboard services, a massive payroll, and of course fuel. It clearly takes a ton of money to keep these floating cities running. All right, now for a really critical part of our health check, the skeleton. This is the underlying structure of the company's finances. And for Carnival, that structure is defined by one massive, massive feature, debt. Just take a look at that number. As of August 2025, Carnival is carrying just over $27.2 billion in total debt. Now, this is largely a hangover from the pandemic, when the company had to borrow heavily just to stay afloat. That is the financial skeleton supporting this company, and believe me, it is incredibly heavy. An immediate question pops into your head when you see a number that big. How do you even begin to manage that? A debt that large could easily cripple a company if it's not handled carefully. So what's the game plan? Well, their strategy is actually a pretty clever form of refinancing. The report shows 2 main steps this year. First, they issued billions in new debt. Think of these as corporate IOs. Then, they immediately used that new cash to aggressively pay off nearly $10 billion of their older, much more expensive debt. And here's why that move is so brilliant. They were paying off old loans with these punishing interest rates, some as high as 10.5%. They replaced that with new debt at rates as low as 4.13%. It's kind of like trading a high-interest credit card for a low-interest bank loan. It's a really strategic move to strengthen their financial skeleton for the long run. Next up, let's check the corporate immune system. Every major company faces external threats, lawsuits, legal challenges. How well Carnival fights these off tells us a lot about its resilience. So one of the most significant legal battles involves this thing called the Havana Docks lawsuit. And this quote from the report gets right to the heart of it, alleging that Carnival was trafficking in confiscated Cuban property just by using certain ports. Pretty wild stuff. And this has been a whole multi-year legal saga. The lawsuit was filed back in 2019. Then, in 2022, a court ordered Carnival to pay $110 million. But then, just in 2024, a court of appeals reversed that decision in Carnival's favor. And now, the case has been kicked up to the U.S. Supreme Court. So the final chapter on this one has definitely not been written yet. The company's also been fighting class action lawsuits related to COVID-19. And so far, the immune system seems to be holding up pretty well. A court in Australia found them negligent but only awarded minor medical costs. And more recently, a court over in Italy rejected most of the plaintiffs' claims. So for now, the financial damage from these cases appears to be contained. So we've checked the lifeblood, the metabolism, the skeleton, and the immune system. I think it's time for our final prognosis. What does all this mean for Carnival's future health? For that, we got to turn to the risk factors. Every public financial report has to include this section on forward-looking statements. This is basically where the company legally has to disclose all the things that could go wrong, all the potential risks and uncertainties that could impact their business down the road. So what's the final diagnosis here? Well, the patient's vital signs, we're talking revenue and profit, they are incredibly strong, but it's supporting a very heavy skeleton in the form of $27.2 billion of debt. Its immune system has fought off some major threats, but some of those legal battles are still lingering. And finally, there are always what we call the known unknowns, risks like a global recession or geopolitical instability that could just change everything. So, this leaves us with the big question, doesn't it? Carnival is riding this huge wave of record revenue, but it's carrying a mountain of debt with some really serious risks on the horizon. Is the cruise industry sailing into clear skies? Or maybe toward a brewing storm? For now, that answer is still out at sea.